Hey everybody, this is Lorelia and I am doing a YouTube live. I want to continue my conversation. I was talking about um, and how debt um, basically keeps the rich richer and it keeps the poor poorer. And what I'm going to do today is I'm going to give you a visual illustration to kind of expand, on that topic because you really it's like I said, you need to understand the correlation in regards to your credit of how economics work in this country, the monetary system, um, along with, um, and there's another, but I can't think of it right now, um, and how credit works. So it's credit, the monetary system, and the economics. And see, a lot of people really believe that credit and debt is a isolated issue, and many of your financial experts teach it as is a isolated issue. And see, when you look at your credit or your debt as an isolated issue, what happens is that you really don't understand what is going on. You are still being um, uh, affected by the puppet master because you don't know who pulled the strings. And so when I did the video about why debt keeps rich people richer, is because now you understand you don't have to speak from a place of weakness. And what do I mean by a place of weakness? Whenever I talk about the topic of student loans or the amount of debt that people have, as well as what's commonly talked about nationwide in this country, many people say, "Oh, woe is me." Why is it shouldn't be like that. No one is there to help out the regular person. And the reason why no one is there to help the regular person is because that is not how this system has been designed. And so there are no one cares about your sympathetic reasons on why you don't understand the game. So this video is about how the rich use debt as money. Now, in the last video, I told you how they can literally create money out of thin air, and why if you don't, and I even went into about how you could do the same thing. But if you refuse to learn the strategy and you refuse to learn how you can create money out of thin air, what will happen is that um, you will always be the one who is on the rat wheel that is just basically chasing your tail. So what I'm going to do before, I want to just make sure I'm live, you know. And I guess I am. I don't know why it's looking like that, but I just hope it looks better. But anyway, so going back to what I was saying. So how does debt become money for the rich? And I'm going to use credit because that is what most people commonly know that I talk about on this channel, as well as debt. And so let's use credit and debt, for example. Now, many people truly believe that that they can become debt free. And although that may be your goal, I truly, sorry, do not believe that a person can be debt free. I do believe that can a person manage their debt? Can a person eliminate some of the debt and then manage whatever's remaining? But I feel like everything is relative to your income. And so the person who is debt free, who says they have no debt, if you remove their income out of the equation, meaning they have nothing coming in, I don't care, they don't have a job income, a business income, passive income, leverage income. They have nothing coming in. If that person has nothing coming in, how is the person going to sustain themselves? And so, how are they going to sustain themselves? They can't. So, that is what I want to talk about. And see, that's what the rich understands. And that's why they keep individuals who don't understand the game in debt. So, like I said, I'm going to use credit. Now, since in my last video, I talked about how the rich can basically create money out of thin air. And how do they do that? They do it by having what it is customers who they loan credit to. And so that can be in the form of credit cards, that can be in the form of credit cards, loans, um, lines of credit, or what have you. And like I said, those banks or those financial institutions or those lending institutions or what have you don't have to have the money in the bank. But see, you, on the other hand, when they give you the money, you have to have the money in the bank. So without me making this an accounting class, there's some things that I'm going to talk about. And there's a word called assets, and it's a word called liabilities. And if you are a, liability, if you are an accounting major or you studied accounting or you know how accounting works or you're a bookkeeper, there is a such thing as assets and there's a such thing as liabilities. And so assets bring money into your this could be on a personal level or business level. It brings money into your pocket, and then liabilities take money out. They take money out of your pocket. So many people don't understand how this correlates to them personally. Even some business owners who have a business don't understand the concept of assets and liabilities. So going back to what I said, the rich, those banks, financing institutions, they understand how assets and liabilities work. So you, customer, you are the asset. You are the asset to the bank, to the lending institution. And since you are the customer, money is going to go in to the bank's pocket. Because remember, like I said, they don't have to have money to lend you money. So if they lend you 15, they don't have to have 15 in the bank. So since the customers are the assets of the bank, if they loan you $15,000, they don't have to have this in the bank. I said 150, but I'm going to use small numbers. They don't have to have that in the bank. But you, my friend, have to have the money in the bank. So this $15,000 that they loan you is now negative 15,000 on your end. And you have customer has to have money in the bank. You, on the other hand, don't have to. Now, there's another side of the equation. Now, in the accounting world, what I just explained to you is what's called a balance sheet. I talked about two areas of the balance sheet, which is assets and liabilities. There is another side of it, which is called either owner's equity or it's either called shareholders equity. But I'm not going to go into that because that doesn't relate to this topic. So I've showed you two of the most important parts of the equation of how debt becomes money for the rich. Now, there is something called in the accounting world called a profit and loss statement. And on the profit and loss statement, there is income and there is expenses. And so when Mr. Banker loans you 15,000, he doesn't just loan you 15,000. There is interest, there is interest, finance charges, and penalties if you are late that you have to pay. So now that $15,000 is not all that you have to pay him unless you pay the balance in full. And so the finance charges and the interest, I'm just going to give easy numbers, but let's just say of this 15,000 he owes you, there is also another 300 that you're going to pay him, and that is going to be income. So not only are you going to pay him the 15,000, and remind you, I'm not doing interest rates or whatever, I'm just throwing numbers. This right here, it's called the principal. This is what you were loaned. You were loaned 15 and then 300 was interest and finance charges. So that not only does he make, and like I said, these are easy numbers. I'm not calculating anything. Of course, that people may say, "Oh, no, 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 the number would be higher if you use a certain percentage rate." That is true. I'm just making this number up. So the 300 is interest, the 15,000 is a principal, and that is income in his pocket. Do you see how he created money out of thin air? Like I said, he didn't have to have that 15 in order to loan it to you. But you, on the other hand, have to pay this out. And so this is negative $300 that comes out of your bank account, along with what you totally owe him. So now, remember, when Mr. Credit, when Mr. Banker gave you 15,000, it was a liability because now you have this over your head. This is what you owe. And then this is the expense of what you have to pay every month. And so you have to have money. So money is flowing out of your pocket, and money flows into the banker's pocket. So this right here, if you can just understand this small topic right here, you would try to be the banker yourself. And so with my new program, the credit to cash flow program, that is what I'm trying to teach people. That if you at least going to borrow 15,000 from the banker, what could you do so it can bring income to you? That's the whole thing. Not that you go out and you go pay for consumer items, which are food, clothes, trips. None of that money is going to bring you more money. And so under this video, you will see a link to a class that I did, which is where I showed you how I was able to show a client of mine who did obtain a debt, but the debt is going to bring her in money. Because imagine if you, using the same example, if the banker loaned you 15,000 and you invested it in something and it's now going to bring you $500 additional every month. And that can be in anything. That could be invested in a business. It could possibly be in real estate. All everything I'm talking about are all surface issues. But at the end of the day, you know that, hey, if I pay for a trip to Hawaii, that doesn't bring me any money. But then if I invest in this rental property, this can bring me money. Or if I invest in this business can bring me money. There is a term in business called return on the investment. So my 15,000 that Mr. Banker gave me, although it's debt, but it's going to return me money. And so since it's going to return me money, now I have my own balance sheet. And so now I have money going into my asset column and not just a liability column. And who knows, there may be some income that you could see once you take that 15,000 and decide to invest it in a business, in real estate. It now becomes an asset on this side of the balance sheet. And I'm trying to see if I can make this bigger, but I just hope everybody can see it. And so it becomes an asset, and any money that's generated from it now is income, income to you. So that's why I said the other day that when you understand not just using credit and debt as an isolated issue, many of your financial experts, they treat it like it's a rare unicorn. Like you only supposed to really talk about this isolated issue when there are so many other factors along with it. Now, if you don't have the financial knowledge enough to use debt and leverage it to bring in income, to create an asset, then this conversation is going to be above your head. And I've said that in the videos prior. I said that I'm going to have a very high level conversation, because gone are the days when I'm going to just keep talking about how you can dispute an item on your credit report. I've already did that. There's over 600 videos on this channel, and I think there may be about 500 live. And so I have tons of content that you can learn how to do that. Recently, right now, what I'm offering in my credit, the Do-It-Yourself Credit Hub, that's where I have a knowledge vault of a whole bunch of topics in credit. Going to be adding some more to it. Right now, there's a $5 promo that I'm doing. You get access to it for $5. $25 is what you would pay 7 days later for the remaining 30 days. And if you want to learn more about that, you have to be on my communications list. And the link is right under this video, where you will get the free video and then learn about what I'm talking about. Because see, let me now really get into the credit issue of it and why the rich really use what I just talked about as money. So for years, I have talked about how debt collectors work and how it's a big business. It's a big business. And so I can't speak for others, but I really go into you understanding how the credit relationship works in terms of you having a contractual relationship with a credit card company. So a credit card company issued you money, created a contractual relationship to loan you money, whether it was a car loan, a line of credit, um, uh, the list goes on and on. Now we're not going to talk about student loan debt because I'm just going to only really talk about credit card debt or loan debt or whatever. We're not talking about student loans because that's a whole different animal. So let's stick with that. So when you decide to get a credit card, you go into a contractual relationship with the credit card company. Whether they issue you the 15, the 5, the 10, or whatever. Remember, they got millions of accounts. They issue that money. They don't have to have that money at the bank. So whenever you decide to be a custom, decide that you want to borrow money from them, whoo, voila, money is created out of thin air because now you are an asset on their balance sheet and you are a dollar sign because they know they're going to make money from you. So let's just say you are now a customer, you've been paying, you're also paying them interest penalties and finance charges, what have you. But lo and behold, something happens. Life happens, you lose your job, you're unable to pay that credit card. And so what happens is you default on a credit card. But see, the rich understands, oh no, the buck doesn't stop here. We can still make more money. Because see, people, I think consumers really think that when they stop paying on stuff, it's like, oh, I ain't gonna pay. I ain't got it. I ain't got it. I ain't got it. Whatever. I ain't got it. You ain't hurting them because see, your account is an account of millions. You just another number on a balance sheet. So with me saying that, um, now that you said I'm not going to pay Mr. Credit Card Company, Mr. Visa, MasterCard, American Express, Store Card, auto loan, or what have you, what they do is they say, okay, we have a whole bunch of bad debt on our books. These are people who have not paid us. But once again, we want to make money out of thin air again. So what we're going to do is we're going to package all those debts and we're going to resell it to the open market. And that's where Mr. Debt Collector Company comes in. And they say, hey, we'll buy all those bad debt accounts and remind you they're buying a package. Now they don't buy it, based on the value. So if you got 15 and you didn't pay for so long, for so many, years or whatever, it ballooned to 18,000. But see, the debt collector, once again, they're in the business of making money out of thin air. They're not going to pay for the exact value of what you owe at 18. So they may get it for, like I always say, 10 cents on a dollar, 7 cents on a dollar, pennies on a dollar, whatever the dollar is. That debt collector buys it at a discount. So the credit card company, once again, they made money out of thin air when you became a customer. They're going to make money out of thin air that now you defaulted on the account. So that package deal of debt may be valued at 1 million. But see, the debt collector company is only going to pay 200,000. And so they get money, once again, money out of thin air from the debt collector company. The debt collector company, they've created money out of thin air because now you are now their customer. You are now an asset on their balance sheet. And so not only does the credit, going back to the credit card company, not only do they get paid on that bad debt, they also get the tax write-off too at the end of the year. So once again, when you understand the monetary system, banking system, how all this works, the silver lining in all this is debt. The silver lining is debt. But see, your financial experts only want to teach you one thing: how to improve your credit, how to get out of debt, stay out of debt, leave debt alone, put it, hide in the closet, stay away from it. And you don't even understand how the whole picture works. That, my friend, is how the rich creates money with debt. That is how they do it. So, like I said, this is how they do it. So, what I'm going to be teaching you is how you can now start to be your own personal banker. You don't need millions and millions of dollars. You could start small. I'm going to show you how. See, when you understand the formula that I'm creating for people, the credit to cash flow formula, you can now become the banker. And being the banker, I showed you the other day with in the last video that I did, that real estate contract is money out of thin air. I don't own the house. I don't have to get a loan for the house. All I have to do is secure that contract, meaning me as a buyer, and I'm not using no money, agree with the seller on a particular price. Once we agree on a particular price, I will resell it. And when I resell it, I don't need no money. The only money I need is at closing to close with an attorney and the title company. That is all I will be needing. And I still won't be using my own money because the money will be used from the sale of the transaction. Voila, creating money out of thin air. No money of mine is used. And that, my friend, if you understand that formula, you will never you will never have financial problems again. It's so much bigger than how I raise my credit score, how to dispute a credit card. See, that's what I'm saying. What I'm talking about are high level conversations, and they're only going to appeal to a certain demographic of people. But see, this information, this can't be duplicated. You either know it or you don't. That's why I said I will leave the other stuff to those who want to talk about it, the credit, the this, that, and the other. I give emails all the time from people saying, it's so many people on YouTube, I don't know who to listen to. And like I tell them, I'm not in the convincing business. I'm not going to convince nobody to listen to me or what have you. You listen to the person that you resonate with over the screen, stick with whatever they're teaching you. Hopefully, what they're teaching you is right, and then get some results and call it a day, you know. And so that's why I said I'm leaving that sandbox to them, and I'm going to talk about higher level issues and how to help people. So, like I said, the credit to cash flow program, I've launched it in the month of July. It will continue. I will be putting content, and not really content, but really how to ways. I mean, things that you can really put into practice right now, but that would be only on a private basis. And that's only if you're part of, you're on my email communication list to get all the updates. So I really hope that this video is really streaming clear, because when I go over to the other side, it's not looking good. And so I'm just really wondering about the strength of YouTube lives. So once again, this is, yeah, I'm good, my strength is good. So once again, this is Lorelia. Please like, share with others, especially individuals that um, who are looking for something different, better, um, want to have a different level of conversation. Please share it with them. And also, if you want to be on my email communications list, where you can learn more about the credit to cash flow program that I'm going to be doing, you can learn more about it right under this video. So once again, this is Lorelia, and I am signing